As we've been reporting, the federal government's taking over mortgage giants Fannie Mae and Freddie Mac. What does this mean for you and your mortgage? Joining us is financial journalist and early show contributor Vera Gibbons. Good morning.
Good morning, Harry.
We went out into the trenches. We went out into real America to get the real questions. Are you prepared to get the answers?
I'm good to go.
Let's listen to question number one.
Just wondering how this is going to affect the housing market. Is it going to make it harder for first-time home buyers to try to get a loan, especially since the government's taking over banks? Every month you hear about foreclosure rates going up. What does this mean to us?
What does it mean, Vera Gibbons?
Good question. More liquidity, Harry. We're talking a big cash infusion, $200 billion. So it's going to be easier for first-time home buyers as far as their financing options go. More credit will be available. Mortgage rates will stabilize, could even come down by as much as a full percentage point. So that's the good thing. But this is not going to do much to actually prevent home prices from continuing to decline. And to answer the last part of the question, it's not going to solve the foreclosure mess. We've got 1.2 million homes in foreclosure nationwide, and foreclosures are expected to continue to rise.
And if you have Freddie Mac, one of those mortgages, we asked Henry Paulson this morning, this is not a direct infusion to say help the people who may be in foreclosure or in trouble with those kinds of mortgages. Right. This is to help settle the market down in general.
It's all about providing stability to the market and credibility back to the market, that type of thing, yes.
All right, let's take another question from somebody on the street. Let's see.
I want to know why the government is helping out Fannie Mae or any other bank that has gone under.
Good
yeah, here we go.
question.
See, here's the stability thing. Yeah, it's about bringing stability back, instilling a sense of confidence, alleviating the fears, the uncertainty that's out there. This is a big, expensive intervention. Tens of billions of dollars is going to cost taxpayers, but it's necessary. You know, over 50% of the loans pass through the hands of Fannie and Freddie. They are the glue that hold the housing market together.
Trillions of dollars.
Trillions of dollars. Yeah. $5 trillion total that they guarantee or own. So they are crucial. And if the government did not act, it'd be a complete disaster for the financial markets here and abroad.
The other thing we asked Henry Paulson, though, a little while ago was that is this a bad model to begin with? And he says, yeah, this whole government-sponsored enterprise, it gives the idea that, oh, yeah, the government's behind it, but it's a publicly traded, it's you know, it can't be two things at once. It's certainly, I think if you were going to grade it in the end, it's a failing grade.
Yeah, it's a failure. It's a failure for investors, too. You know, investors have lost something like 70%.
A lot of money.
Yeah.
Let's take another question.
I have a question for you. If the government takes over Freddie Mac and Fannie Mae, what happens to the investors who have put money into it? Do they lose it all, or will they get it back from the government? That's what I'd like to know.
No, I did not. Okay. Do they have any chance of getting any money back?
Well, here's the thing. I mean, you've got new executive changes going on. They've been announced, the dividends have been cut. You're talking a 90% loss in the value of these stocks over the past year, and they're expected to take an additional hit today. The biggest losers would be the mutual fund companies, but the lesson to the small investor, diversification.
Diversification. One more question, real quick.
I'd like to know, is this a good time to get a second mortgage? Is it going to be harder at this time?
The second mortgages, that's the banks, that's the credit unions, that's the mortgage companies, and those are typically privately funded. There could be a ripple effect from this as things sort of stabilize, but you're not going to see any kind of dramatic impact on the mortgages for second mortgages.
Vera Gibbons, as always, thank you so much.
Harry.
Do appreciate it.